Good morning, everybody, and this is your Dow Jones day trade setup for today. So at the moment, it's looking like we have a bit of a V reversal brewing. V reversals are rare, so we'll take that with a pinch of salt. I think the key thing at the moment is we had this structure to the left here, which has kind of broken. So we'll get to that on the lower time frames. I'm out of all trades on this. Basically, heading one way, got out of it with a bit of a loss, but that's nothing to worry about at this stage. I do believe we are still looking for value. Okay, I don't believe that this thing's falling to the floor. We've had some CPI data come through and inflation fears that are coming through, so that's what's driving this right now. But the value buyers are going to step in shortly, and the big question is, where is that value, or where is the perceived value that the big boys are looking for? Anyway, looking at the 3 hour, we do have a bit of a moving average crossover here. We're below the 155, and we've also broken consolidation wedges all over the place. So there's a couple. So there's one. Okay, so that was one, and I broke to the downside, and then we did it again here, yeah, and basically my kind of in 1 week it almost shatters my theory of these breaks to the opposite direction are rare, with only a 25% probability of continuation on them, and lo and behold, that is happening this week. And not once, but twice. I suppose this one's not completed yet, but that one's definitely a break of a wedge, moves the down, and it actually accelerates the downside. So 25% probability of that happening, and it happened. But I think for all intents and purposes at the moment, these wedges are not what I'm worried about. So I just want to just make these levels unselectable and just delete the noise. Right, so first things first, we have broken this area here, which is 33,783. So broken that to the downside. We've got crossovers, and pretty much all three moving averages have crossed over at the moment. Oscillators are grouped to the downside, so not wanting to be short here, but I'm definitely looking at 33,829 and also this area here of 33,783 as a potential area to short. Why I say potential is, if you look what was happening here, you sort of had a little bit of indecision, you had some buyers step in, and then you had this exhaustion bar onto a bigger level here. Now the bigger level is basically the bottom of this range. Okay, it's kind of lines up with these two tails here, but it is the true bottom of the range. So the range is not quite, well, it is broken, but you can see it's broken. We close below it there, but that's an exhaustion bar onto structure. So the big question at the moment is this going to continue a little bit further? And I think continuation for a little bit further would really be ideal. And the reason I say that is that you do need a decent pullback, because that's just going to bring back the buyers eventually. This market's not the market that people are selling. They're buying this market. So at the moment, we at lofty levels, we PE ratios at all-time highs of the indexes and a lot of stocks, and there's a whole lot going on. We've gone through the earnings season. A lot of the earnings will be banked, and then basically lighten up portfolios and wait for better buying opportunities further down. That's the cycle of the market, and that's exactly what I think is going to transpire. So with all that rambling out the way, the areas to watch at the moment, 33,829. If we kind of start rejecting that, and I would do it on the 15 minute, because that's going to be the critical part here. You can see us looking like a bit of a wedge. Then you're looking for short scalps, and when I say short scalps, you want to keep your stops as tight as possible, and maybe even just keep your position size a third or a half of normal, and move the downside. You can see this pin bar here, which was formed with the CPI data that came through. and then pretty much move to the downside. So it's been one-way traffic for 2 days on the 50-minute. You can see we eventually got a crossover of the moving averages right here, and we've kind of maintained it all the way down. So at the moment, I think that's kind of the play that we need to look for, is look for opportunities to short scalp this. Keep your stops really tight, because it is going to be looking for levels. And I'm going to just pop back to the 8 hour here, because the next logical level is pretty much down here, and that is at 33,274. Oscillators are starting to group nicely to the downside. So, and the previous swing high pretty much lines up on the 61.8 here. We are at the 50% at the moment of this last move up. So between 33,645 and 33,274 is where you're going to find some more buying opportunities to come into this. Okay, so yeah, two choices. If you are going to look for shorts, it's pretty much a short scalp. I'm not in that camp at all. Let me just be clear. I'm only looking to buy, so lay on the thumbs down again. But I make money that way, and this trend is up, so I'm looking for opportunities to buy into this. Not sure it'll be off this level, could be off this level, or it'll definitely be down here at 33,274. So that's kind of what I'm looking for. Anyway, hope it helps, and we'll catch up with you tomorrow. Cheers for now.